key point here is that, credit is money effectively, right? You can expand the money supply just by issuing credit or debt.
Mm-hmm.
So, and that's equivalent, right? It's equivalent to expanding the money supply, which is very important. So the more of these Bitcoin IOUs or interbank credits, liabilities, whatever you want to call them, that there are in circulation, that is inflationary. That's an expansion of the money supply. To your point, I think that banks, being risk averse, are more likely to issue letters of credit rather than physical Bitcoin because
Mm-hmm.
that reduces their risk. And this is the money creation process, right? Like if you can Google this term, money creation process, and this is exactly how banks work in fiat world, right? They create liabilities on top of liabilities. It's leverage on top of leverage across networks of these transactions. The one thing I would point out here that might be a little bit different in a Bitcoin world is we have to question the continued likelihood of, in this example, Robert going through Lester to purchase Bitcoin miners rather than going directly to Bitmain. Like we would expect transactions to be less intermediated in a digitized future. Not to say that it goes away completely, but I think it would be less intermediated than it is today. And I guess the other point too is although it's in the bank's interest to issue the bank letter of credit rather than physical Bitcoin, it seems like parties to a transaction would opt to deal in physical Bitcoin as much as possible. Now, in this case where you said you're a new merchant, you don't have any money and you just have credit with a bank, sure, that makes sense there. But for more established firms or individuals, I think you'd be more likely to just deal in physical Bitcoin rather than credit instruments because Bitcoin's so hypermobile. And you could just, basically avoid financing charges.
I think you're right. I think that like a lot of why credit is necessary was because gold wasn't transportable.
Mhm.
But I think it really depends on banking has much more to do with relationships than anyone ever taught me.
Yeah,
And
for
um,
sure.
or in my fiat life, I remember I had to go into a bank. I had a check from a customer for $200,000, and I needed to deposit it on a Friday, and I needed to be able to to withdraw cash against it the next day. And I sounded like a scammer. I was walking into a bank in a branch that didn't know me, and I was like, "You have to
Right.
credit me this tonight, and I need the cash tomorrow." And they were saying I went into a different branch, and they're like, "Well, we can't clear it." And I was like, "Can't you?" This is actually when I learned that banks, there's no like central system where banks can just verify that everyone has the money, or at least there wasn't then. This was not too long ago. I'm like, no, I was like, but I think it was like a Chase Bank check from a client,
Mhm.
and they're like, no, when we debit your account, we debit it based on we think that the money's there, but that's why like the waiting period's there. Luckily, I was able to go across town to the branch where I'd been for over a decade, and I was like, hey, I need this money tomorrow. And they're like, well, we've known you for 10 years, and so yeah, you can have it tomorrow, but it's only because we know you. I was like,
Right.
wow, that's banking. That's just because
Mhm.
that's the definition of credit, honestly, right
Mhm.
there.
Yeah. Credit
And so
worthiness.
right. And so I think your point is a good one. I think that I was trying to conjure the most inflationary example
Mhm.
possible for how inflation could still happen in a Bitcoin system when, everyone's full of exuberance. But I think more likely what you're saying is correct, which is that people won't do that, and there won't be nearly as much inflation.
Yeah, this is distant. You gave the very inflationary example. I'm kind of giving the counter example.
Mm-hmm.
Um, and these are both distant Bitcoinized futures. I think what we're going to more likely see during the monetization of Bitcoin is what we see today, right? People borrowing fiat against their Bitcoin to fund purchases or operations or present spending. And in some of those instances, you have lenders like, the BlockFis of the world happy to provide that loan, but they're going to turn around and take that collateral and rehypothecate it. They're going to loan it out, and, to funds and all these other things for short selling and other activities, which is inflationary, right? They're rehypothecating the collateral. So it's not like Bitcoin's just some kind of magic bullet that makes inflation just disappear overnight. Like there's
Totally.
a lot of ways you can have inflationary pressures even on a Bitcoin standard.
Yeah, and I think that was like such a stumbling block for me in imagining this future. But I don't have that. I don't have that problem. I don't have that problem anymore. I think you're exactly right. So, and by the way, some banks won't rehypothecate.
Mm-hmm.
Some will give you the loan and they'll keep the collateral locked away, and they might charge a little bit more for that. Mm-hmm. That'll be a service. That'll be something you choose. I want a lower interest rate, but I don't know for sure if my collateral's there, or do I want to know my collateral there and I'll pay a little bit extra? Again, that's the market finding the interest rate.
Yeah. And again, just to reiterate, those are the two original functions of banking: is the maturity matching between lenders and borrowers, and custody, right? So if you want to not have to worry about custody and you want to put it with a bank, in fiat world, you get paid for that deposit, right? Well, at least you used to. We barely get paid anything now. But in a Bitcoin world, you're more likely to have to pay for that custody function.
Right. Saifedean had a really interesting answer to what will the Bitcoin what will central banks look like on a Bitcoin standard. And I had never heard this version, but he said that I think there will be thousands and thousands of them, and each will be a small community of people who run nodes on behalf of their friends and family. And it'll be more about verification of transaction propagation. They'll just be much smaller and much more community oriented, and there will be a lot more of them, and they won't be central.